Greetings, everyone. I hope you guys are all well and in good health. So in this video, I'll be explaining question 3.1.2, which focuses on inventory. So this question requires us to calculate the closing inventory as at year end of June. So this question is requiring us to calculate the inventory that we have in our storeroom at the end of June. Firstly, I'd like to bring your focus on this table over here. So this table consists of 4 columns. The first one is dates, the second one is receipts, third one is issues, and the last one is balances. So under receipts, you enter all the information for purchases and also returns of purchases. And the issues, you enter all the information for your issues to the production department and also the returns that the production department has made to the warehouse. And under balances, you enter the balance that is currently available, the balance of inventory that is currently available at the warehouse after each transaction. So after you've recorded all your receipts and all your payments, what is the balance that is present at the warehouse? So we'll start straight away with the question. So our first transaction takes place on the 1st of June, where we are told that we have a balance of 1,000 units in kgs at a cost of 150 per kg. So immediately the keyword here is balances. We know that this transaction should go under the balance column. So we'll go to the balance column. Under units, we should have 1,000 units at a cost per unit of 150 and at a total cost of 150,000. How did we get the 150,000? We simply said the 1,000 units multiplied by 150 to get a total cost of 115. So now that we are done with our transaction, which took place on the 1st of June, we can now move over to the next transaction, which is on the 3rd of June, where we are told that purchases of 2,000 units in kgs were made at a cost per unit of 170. So the keyword here is the purchases. As I've explained earlier in this video, that all the purchases that take place will go under receipts. So under receipts, we'll have 2,000 units at a cost per unit of 170 and at a total cost of 340,000. So what I want you guys to take note of is that after each transaction, it is very important for you guys to calculate your balance, the balance that you have in the warehouse after you have bought inventory or maybe issued inventory to the production department. So the first thing that we're going to do under the balance on the 3rd of June is to bring down the balance that we had in our previous transaction, which was 1,000 units at a cost per unit of 150 and at a total cost of 150,000. So from there, in our balance on the 3rd, we are now saying that we have 1,000 units in the warehouse. But now that is not complete because we know that we made purchases of 2,000 units. These purchases of 2,000 units have to be reflected in our balance. So we have to bring down this balance, these purchases in our balance over here. So over on the 3rd of June, we have a balance of 1,000 units and also a balance of 2,000 units at a cost of 170 and at a total cost of 340. So guys, how do we get the total cost? We get the total cost by taking the units and multiply them by the cost per unit. That's how we get our total cost. This will apply in all of our transactions that we do in this activity. So after we've calculated our balance on the 3rd of June, we can now move over to our next transaction, which takes place on the 6th of June, where we are told that issue to production was made of 1,500 units and the cost is not given. So now what we know is that issues are reported under the issues column. So now we are told that we issued 1,500 units to the production department. So the first thing that you have to take notice of when you issue inventory to the production department is do we have this inventory that the production department has requested? Do we have 1,500 units in our warehouse to issue to our production department? So, and also what you have to take notice of is which inventory method is used in this question. So in this question, we are using the Fifo method. So meaning that the first inventory that was bought is the first inventory that is going to be issued to the production department. So from our balance, it is in order already that the first units that we purchased were 1,000, followed by 2,000 units. So the first units that are going to be issued are these 1,000 units. So we go under issues, we actually issued 1,000 units. 1,000 units at a cost per unit of 150 and at a total cost of 150,000. So the transaction on the 6th is not complete when we have issued 1,000 units, because it requested that we issue 1,500 units. So from the 1,000 units that has been issued, an additional 500 units have to be issued to fulfill the request of 1,500 units. So where are these 500 units going to come from? They're going to come from these 2,000 units. So we'll have 500 units over here, and at a cost of 170, which is being taken here from here, and at a total cost of 85,000. So now that we have issued everything, we have to now calculate our balance, the inventory that we have in our storeroom after this whole issue. So we know that 1,000 units were all issued, so we cannot bring them down in our balance. So we know that we are left with a portion of 2,000 units. So 1,000 units we issued, so we can't bring them down because they are gone. So the balance that is left of these 2,000 units, we simply say 2,000 units minus 500 units that we issued to get a total of 1,500 units at a cost of 170 and at a total cost of 255,000. So now that we have calculated our total on the 6th of June, we can now move over to our next transaction, which is on the 12th of June. So on the 12th of June, we are told that purchases returns of 500 units, which relate to the transaction of the purchases on the 3rd of June. So they relate to these transactions, right? So now what we have to do is we have to take notice of what was the cost per unit on the 3rd of June, because for these 500 units, the cost per unit was not given. So we go to the 3rd of June, we notice that the cost per unit was 170 units. So we're going to apply the cost per unit to these 500 units that are being returned. So we go under units, we'll have 500 units, but the 500 units will be reflected as a negative 500 because our balance, meaning that the stock that we have in the warehouse is decreased now, because now we are returning 500 units, meaning that we're taking out units from our warehouse and we're returning it to our supplier. So our inventory in the warehouse is being decreased. So hence this is now reflected as a negative. So we have a negative 500 units at a cost of 170 and at a total cost of 85,000. So when we calculate our balance, we have to decrease the balance that is currently in the warehouse. So we have 1,500 units currently in the warehouse. These 1,500 units have to be decreased by 500 units because we don't have the this inventory in our warehouse anymore. It was returned to our supplier. So our units will now be 1,000. How did we get this? We said 1,500 units minus the 500 units that were returned to the supplier at a cost of 170 rand and at a total cost of 170,000. So now that we have calculated our balance, we can now move over to our next transaction, which is on the 18th. So on the 18th, purchases of 1,500 units were made at a total cost of 247,500. So you will notice that in this transaction, the cost per unit was not given, but the total cost was given. So under purchases, we'll have 1,500 units at a total cost of 247,500. So now what is left for us to calculate is the cost per unit. So how do we get the cost per unit? We simply take the total cost, we divide it by the units to get a total cost per unit of 165 rands. So from here, since we have now recorded our purchases, we have to calculate our balance. So for our balance, we have to now bring forward our balances from our previous transaction of 1,000 units at a cost per unit of 170 and at a total cost of 170,000. So now we have to reflect our purchases in our balance. So we made purchases of 1,500 at a cost of 165 and at a total cost of 247,500. So now that we have calculated our balance, we can now move over to our next transaction, which takes place on the 20th of June. So on the 20th of June, we are told that we issued to production 800 units. Sorry. So we go under the issues column and we enter. Oh, so before we enter anything under the issues column, we have to first consult our balance and check if we have the 800 units that I've requested for us to issue them. So we see that in our balance, we have a total of 2,500 units, 2,500 inventory in our warehouse. So this means that we are able to issue the 800 units. So we have to use the Fifo method. So the first units that were purchased were the 1,000 units. So the issue will relate to these 1,000 units at a cost per unit of 170. So we'll have 800 units at a cost per unit of 170. At a cost per unit of 170 and at a total cost of 136,000. So now that we have recorded the issue to production, we can now calculate our balance. So we can't bring down the 1,000 units because we know that from the 1,000 units, we have issued 800 units from that. So we will say 1,000 units minus 800 units that we've issued to get the remaining units of 200 at a cost of 170 and at a total cost of 34,000. And then from there, we bring down the 1,500 units. So the 1,500 units at a cost per unit of 165 and at a total cost of 247,500. So now that we've calculated our balance, we can now move over to the transaction on the 22nd, where we are told that we made purchases of 3,000 units at a cost per unit of 175. So since these are purchases, we know that they should be recorded under receipts. So under receipts, we'll have 3,000 units at a cost of 175 and at a total cost of 525,000. So from there, we have to now, since we've recorded everything, all of our purchases, we can now calculate our balance. So from our balance, we're going to first bring down our balances from the previous transaction of 200 units at a cost of 170 per unit and at a total cost of 34,000. And also 1,500 units at a cost of 170 per unit. No, my mistake, at a cost of 165 rands per unit and at a total cost of 247,500. So from there, we now reflect the purchases that we made in our balance, where we say 3,000 units at a cost of 175 and at a total cost of 525,000. So now that we have recorded our balance, we can now move over to the next transaction, which is on the 25th of June, where there is issue to production of 2,000 units. So immediately when you know that there's an issue there's an issue to production, you have to first consult your balance to see that do you have the 2,000 units available to issue to production. And indeed, you do have them. So we're going to issue the 2,000 units to production according to the Fifo method. We will first issue the 200 units, which was the first that was purchased at a cost of 170 and at a total cost of 34,000. So now that we have issued 200 units from the 2,000 units, we know that the units that are still remaining to be issued is 1,800 units, because if you say 2,000 minus the issued per inventory of 200, we get 1,800. So from the 1,800, we can first issue the 1,500 because it was the first that was purchased, 1,500 at a cost of 165 per unit and at a total cost of 247,500 rands. So now that we have issued a total of 1,700 units, we still have to issue 300 more units in order to issue a total of 2,000 units. So over here we'll have 300 units, and these 300 units will be issued from this batch of 3,000 units at a cost of 175 cost per unit. So our cost per unit will be 175, and our total cost per unit, our total cost will be, I think that's a mistake, it's supposed to be Oh, no, it's not a mistake. At a total cost of 52,500. So now that we have issued these products, we have to now calculate our balance after this issue took place. So, give me a moment. Thank you. So, a portion of 3,000 units are now left because we issued all of 200 units and we issued all of 1,500 units, but we only issued a portion of 3,000 units, and that portion was 300 units. So we say 3,000 units minus the 300 units to get the remaining inventory of 2,700 at a cost of 170 and at a total cost of 472,500. So this is our balance in the storeroom on the date of the 25th of June. So on the 29th of June, we are told that purchases returns of 500 units issued on the 20th of June. So let's go to the 20th of June. On the 20th of June, we issued to production 800 units. So from the 800 units, 500 units are now being returned back to the warehouse. So meaning that in our warehouse, the inventory that we have is going to increase now because there has been a return from the production department. So we go to the 20th of June, where we issued 800 units at a cost of 170. So we'll use this cost per unit for the return of purchases of 500 units. So there we'll have a negative 500 units because a return is taking place, and at a cost of 170 and at a total cost of 85,000. So now this return won't decrease our balance on the 29th of June. It will increase it because more goods are now being added to our storeroom. So on our balance, we're gonna first bring down our balances from the previous month of 2,700 units at a cost of 175 and at a total cost of 472,500. And then from there, we're gonna add these 500 units to our storeroom at a cost of 170 and at a total cost of 85,000. So since we have now recorded all of our transactions that took place during June, we can now calculate our closing balance. So our closing balance will relate to these products over here because these are the products that we have in our storeroom in our last transaction. So we had 2,700 units at a cost per unit of 175 and at a total cost of 4,750, and also we have 500 units at a cost per unit of 170 and at a total cost of 85,000. So this means that we have a total units of 3,200 in our warehouse, 3,000, 2,000 at a total cost of 557,500. How did we get this? We simply added the total costs of 4,725,000 and 85,000 to get this total cost. So guys, that's it from me. If you guys still have questions or you still don't understand my explanation, feel free to consult with your tutors. They will most likely help you. Thank you very much.